Welcome. In this video, Zbcn coin has agreed with 15 blockchains. What will the price do? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze Zbcn. Fibonacci retracement levels, drawn from the top to the bottom, are tools frequently used in technical analysis to identify key areas where price may potentially reverse or begin a new trend. Especially in cryptocurrency markets, investors commonly utilize these levels by analyzing past price movements to predict future support and resistance zones. In this context, the structure in question involves the price reaching the critical Fibonacci zone between the 0.618 and 0.786 levels after a decline from the top and showing a noticeable pause during the recovery phase. Firstly, the 0.618 and 0.786 levels are among the most notable retracement zones in the Fibonacci sequence, with 0.618 also known as the golden ratio. The 0.618 level represents approximately a 61.8% retracement of a rise or fall. This ratio, commonly observed in nature and financial markets, is known as the golden ratio. The mathematical structure behind this ratio is directly linked to investor psychology. People's tendency to react at certain levels often causes these zones to have a significant impact on price. The 0.786 level is typically considered the final possible reaction point if the 0.618 level is surpassed. When the price reaches 0.786, many investors tend to take profits or initiate final sell-offs. However, breaking through this level often indicates that the retracement has ended and a new upward trend has begun. In this context, the current pause in price between the 0.618 and 0.786 Fibonacci levels indicates that investors are closely watching this zone. A pause at these levels means the price is at a decision point. Trading volume generally increases in this range, and the balance between buyers and sellers becomes more delicate. When the price reaches this area, some investors interpret it as a strong resistance and sell, while others believe it may break through and start buying. This can lead to price consolidation, where the market moves sideways and appears indecisive. However, a breakout above this range would be a highly positive technical sign. As long as the 0.618 and 0.786 levels act as resistance, it's harder for the price to move upward. But once these levels are breached, the prior resistance is expected to turn into support, shifting market sentiment in a more positive direction. Investors often interpret such breakouts as the beginning of a new bullish wave, increasing buying pressure and causing the price to accelerate. This could trigger a stronger rally, especially as investors who are waiting for confirmation enter the market. At this point, another critical factor is volume. If the price breaks above the 0.618 and 0.786 levels with increasing trading volume, the breakout is considered healthier and more sustainable. Strong breakouts with high volume suggest not only speculative moves, but also that a broad base of investors is confirming the breakout. This boosts investor confidence and attracts more buyers. In cryptocurrency markets especially, it's common for prices to rise 20%, 30%, or even 50% after such volume-backed breakouts. Additionally, it's quite common for prices to revisit the 0.618 or 0.786 levels after breaking out, a move known as a retest. Many investors view this as an ideal entry point, as it confirms that the broken resistance has now become support, further strengthening the bullish technical outlook. If the price bounces upward from these levels after a retest, it technically indicates a renewed rally potential. Moreover, once the 0.618 and 0.786 levels are broken, investors typically start watching for the next resistance areas, which may include previous highs or psychological resistance points. Especially on larger time frames, breaking through these levels often marks a trend reversal. This causes investors to shift from short-term to medium or long-term bullish expectations. To summarize, the fact that the price is currently stuck between the 0.618 and 0.786 Fibonacci levels indicates that it's at a technical decision point. These levels have historically proven reliable and significant. If the price breaks through them decisively, it could signal the beginning of a new bullish trend from a technical perspective. Investors may interpret this breakout as a signal to open long-term positions. However, if the price fails to break through and starts facing downward pressure again, the correction may deepen. Therefore, investors should carefully monitor price action, volume, and other technical indicators. In technical analysis, such breakouts can signal new opportunities, but as always, taking action without proper risk management can result in irreversible losses. For this reason, as long as these resistance levels are broken with strong volume and confirmation, a continued upward movement is likely. But we can't rely solely on Elliott wave analysis. Let's take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
Due to the nature of markets, price movements often form around certain patterns and structures. When these structures are analyzed with technical tools, they provide investors and traders with a roadmap. In this context, the cup formation emerges as a strong and noteworthy pattern in technical analysis. In the scenario being discussed, the price is currently continuing this cup formation, and if the formation is completed, a potential upward target equal to the depth of the cup may emerge. This is considered a highly positive and promising structure for investors. The cup formation typically appears during a consolidation phase following a decline and reflects a structure where the price gradually recovers from bottom levels to higher levels. Visually, it resembles a U-shape or a T-cup. On the left side of the formation is the decline, the middle represents the bottom, and the right side indicates recovery. The fact that the price is in the recovery phase on the right side clearly shows that buyers are starting to show renewed interest and the market is slowly gaining momentum. In the current analysis, the price continues to form the cup pattern. To complete the formation, the price needs to reach the peak level on the left side of the cup. If the price rises to this level and then breaks above it and holds, the formation is considered complete. At this point, a critical threshold in technical analysis is crossed. Once the pattern breaks, the price target is typically projected upward by the distance between the lowest point of the cup and the breakout level. This indicates significant upward potential. Such formations provide stronger signals on higher timeframes. Cup formations that occur on daily, weekly, or monthly charts can be particularly helpful for investors making medium to long-term decisions. A price movement that is continuing to form a cup structure often attracts attention from many investors. These formations are not only linked to technical patterns, but also closely related to market psychology. During these periods, as market participants begin to regain confidence and shift toward buying after enduring selling pressure at bottom levels, prices often signal an upcoming upward breakout. Furthermore, the cup formation is not always limited to its basic shape. Sometimes, after the cup is completed, a handle may form, creating the cup and handle formation. This is considered even stronger bullish signal. However, the current structure being analyzed is a classic cup formation that has not yet formed a handle. If the structure completes and breaks out, the upward price target is calculated based on the depth of the cup, which presents a clear bullish potential for investors. As the price approaches the upper resistance of the cup, some investors may look to take profits, leading to short-term pauses or minor pullbacks. However, such pullbacks are natural and healthy. Markets don't move in a straight line. Price movements come in waves. What matters is that the overall structure remains intact and the price stays within the main upward trend. As long as the formation is not invalidated and the structure holds, the likelihood of the price reaching its target level remains high. At this point, there are several key technical details that must be considered for the formation to play out successfully. First, trading volume is a critical indicator. On the right side of the cup, during the upward movement, increasing volume signals strong demand behind the move. An uptrend without volume may not be sustainable. However, a volume-supported uptrend suggests that the price is more likely to break out strongly. Therefore, investors should pay attention not only to price, but also to trading volume. Support and resistance levels also play an important role during this process. When the price reaches the upper part of the formation, the resistance zone, it may face selling pressure. However, if this area is broken with strong volume, it confirms buyer dominance. After the breakout, the resistance level becomes a support zone, and when the price pulls back to this level, new buyers may step in. This further demonstrates the reliability of the technical structure of the formation. Currently, it is clear that the price is maintaining its cup formation. The structure may be very close to completion. If the price continues its upward move and successfully breaks the formation, this will be a strong buy signal for market participants. Technical traders in particular follow such breakouts closely and adjust their positions accordingly. This can lead to a more positive market sentiment and drive prices even higher. Additionally, the uptrends that follow cup formations are generally steady. Because forming such structures takes time, the price matures during this process. This maturation period strengthens the position of patient investors. Once the formation breaks out, the move to the target level often accelerates. This boosts investor morale and reinforces market confidence. In conclusion, the ongoing cup formation in the current price structure should be viewed as a highly promising technical setup. If the formation completes and breaks out, the price has the potential to rise by the depth of the cup, which presents a strong and positive signal from a technical analysis perspective. If the formation plays out correctly, it may present significant opportunities for both short-term and long-term investors.
Zebec's latest post on its official page on the X platform points to a significant development that could increase interest in the project and expand its use cases. The post highlights that Zebec's innovative products, the silver and carbon cards, are now integrated with a total of 15 different blockchain networks. The most striking aspect of this development is that the Octa Space network has been added among these 15 blockchains. News of such integrations can serve as positive indicators that boost investor confidence and attract attention from crypto enthusiasts. Support from various blockchains or the ability of a card to operate across many major networks directly showcases the project's level of technological advancement and real-world utility potential. Zebec's silver and carbon card products provide crypto users with easier ways to use their digital assets in everyday life. These cards are supported by MasterCard infrastructure, which significantly expands their usability on a global scale. Thanks to MasterCard support, users can load their crypto onto these cards and spend it at millions of stores worldwide. However, the truly revolutionary aspect here is that these transactions are not limited to just one blockchain. The Zebec card now supports major networks like Solana, Ethereum, BNB Chain, and SUI, and has recently begun supporting newer networks such as Octa Space. From a technical analysis standpoint, one key fact emerges from this kind of news. Every blockchain integration increases Zebec's potential user base. More users equals more transaction volume equals greater value potential. This chain reaction is particularly impactful for projects like Zebec that integrate into the real world. Developing a system that not only functions on the blockchain, but also enables real-world spending and liquidity of crypto assets is considered one of the foundational elements of a functional economy. The fact that the silver and carbon cards support 15 blockchains also demonstrates the flexibility and robustness of the technical infrastructure. This is a major accomplishment not only financially, but also from an engineering perspective. Each blockchain has its own architecture, transaction model, consensus mechanism, and token standard. For instance, the Ethereum network uses the ERC20 standard, Solana uses SPL, and BNB Chain uses BEP20. Zebec's ability to integrate these different standards into a single wallet/card infrastructure is a significant engineering achievement and suggests that more chains may be added in the future. Additionally, this post reflects Zebec's clear growth strategy. It is a strategy focused not just on token price or hype, but on actual products and services. This provides a more solid foundation for long-term investors. A project's growth strategy should not only focus on acquiring new users, but also on maintaining user loyalty and expanding use cases. With this move, Zebec offers its users more freedom, broader network support, and a larger ecosystem. In the crypto market, such developments have the potential to trigger FOMO among investors. Especially in low market cap altcoins, innovative steps like this can lead to sudden and strong price increases. However, what's important is to back up such announcements with real progress. Zebec has demonstrated this repeatedly, and it seems to have crossed a significant threshold in terms of investor trust. So this development is not just a news event, but also a long-term strategic move with strong technical potential to contribute to the project. The way this update was shared is also noteworthy. The post on the X platform was clear, easy to understand, and visually compelling. This shows that the marketing team is working strategically. Many successful projects gain investor interest and reach wider audiences through professional communication strategies like this. With Zebec using MasterCard infrastructure, the fact that cryptocurrencies are now spendable in daily life signals that a major bridge has been built between the DeFi world and traditional finance systems. This is a positive development not just for Zebec, but for the entire industry. Such bridges allow individuals who have never dealt with crypto before to become part of the system. When someone can use crypto to pay for everyday purchases with a regular card, the system becomes accessible, and anything accessible has the potential to grow. In conclusion, Zebec's latest announcement has the potential to trigger a range of positive developments, technically, fundamentally, and psychologically. The project has taken a highly successful step towards increasing its user base, expanding cross-chain accessibility, strengthening card technology, and integrating decentralized finance with the real world. It's clear that developments like this could provide serious long-term benefits for the Zebec ecosystem and the Zbcn token. Especially when combined with technical analysis patterns, support and resistant structures, and indicators, such news may yield even stronger signals. Although the market remains open to short-term corrections, infrastructure advancements like this are crucial for Zebec to secure a lasting place in the industry over the long term.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.